Welcome back, guys. No Ivory Tower Economics here, and today we're going to be looking at the price of gold. So, yesterday, gold hit a new all-time high of 5,000. Let's call it 5,600 bucks. It's just $2 shy of 5,600 for 1 ounce of gold. And yeah, so if you look at this monthly candle for gold from the beginning of the month to the high, it's up almost 30%. So that's the biggest monthly gain in like 15 years or so, something like this. I was looking at it before. It's a crazy, crazy blow off top kind of scenario. So today, like I'm gonna be talking about like where are we in the cycle, in gold's cycle. So if you look at gold historically, it's had two major bull runs in the last 50 years, one in the 70s during the 70s recession or depression, whatever you want to call it, and then another one from 2000 to 2011. And then now you could say, I mean, it depends on how you look at it, right? So if you look at it where from here, start, I guess what I'm trying to say, the current run of gold, it's either currently in its 10th year, more or less, give or take, because it started more or less December of 2015. So it's just shy, it's like 9 years ago. Or if you look at it from this point, we're about 8 years in. So it kind of depends on how you're measuring it. I kind of see this part here more as consolidation where not much happened. Yeah, it did go up a little bit, but if you count from here, then we're 8 years in. Counting from here, almost nine, almost 10 years in. At the end of this year will be 10 years more or less. So it really depends on how you measure it. With that being said, I do I do see gold running until the end of this decade, right? So roughly till 2008, maybe even to 2030, you're gonna see gold still continuing on a bull run. I do suspect, like I've said in some of my previous videos, I do suspect that gold will hit some kind of a major high Q1, possibly Q2 of this year. And I base that a lot on the BBWP. So if you look at the BBWP here, the BBWP is a measure of volatility. How big are the swings? How large are the swings in price action, whether up or down? It doesn't tell you direction. So if you look at the previous time, the BBWP, well, there's been two other previous times here in the last ten years or so, this time being the third time. So right now, the BBWP is getting into these extreme reads where when it gets beyond 99 percentile, it starts to get these red bars like this. So it's getting very, very hot, and it could stay up there for a while. As you can see back here in 2006, the BBWP stayed hot in the 99 percentile for about 8 months before it started cooling down, right? And what causes it to cool down is when the price action doesn't move much. It allows the BBWP to reset. So if you, as you could see here, it started to go up significantly, and then halfway through the move, more or less, it actually had a big reversal, and it had like about a 30% reversal. I think it was 25% from top to bottom within 2 months, and then it bounced from there again. So you had these very volatile moves, big price actions moving up and down, which allows the BBWP to stay up. So if we get a big pullback from gold, which is possible in the next month or two, then the BBWP could still stay very hot the way it is over here, right? Um, so then what happened in the year 2000? Then it started to cool down into Q3, Q4 of the year 2000, and then it cooled off for pretty much a year, and not until January of 2008 did it really get into this hot territory again. But mind you, it started to trend in an upward direction again, so it was becoming bullish again. It started having big moves, so it allowed the BBWP to start expanding again and created another high. Same thing, it had a big drop off. I think this one was closer to like a 30% drop off. And not only did it test the 21 exponential moving average, it broke through it and almost tested here the 55 exponential moving average. Then the BBWP stayed in somewhat of a high territory for several years after that, pretty much 2 to 3 years after that. But it was just like slowly trending up, but it never got into this extreme reads again. And then it made a high, the all-time high at that time, which was in August of 2011, and then from there, the rest is history. It went into a bear market essentially. Although I do think it was a relatively short bear market. It was pretty much from 2011 to 2000, so about a 5 year bear market. But if you count this as consolidation, even though it did go up a bit, then you could say it's kind of like a 7 year bear market. Um, so that's kind of where I think we're currently at. We're probably somewhere in this phase or in this phase of gold's current run. We haven't had a big pullback yet. Um, and I think it's coming. I think it's coming in the next, probably by the end of this year, you're gonna get a big pullback from gold, but I think it's gonna consolidate. It's probably gonna look something very similar to this, maybe even something like this, and then continues running. I really do think it's going to have to retest the 21, especially the 21 exponential moving average, because historically speaking, it doesn't want to stay away from this moving average for that long. And if it retests the 55, then that's a fantastic buying opportunity. As you can see here back in 2006, sorry, 2008, the RSI made this high, and then later in 2011, it made this other lower high, and that was your divergence in price action, which kind of was, a signal within itself telling us that, what, this run is spent, and now we're gonna go into a downward we're gonna see some downward price action. And from top to bottom, it was like about a 40. I didn't get it correctly, but it was about like a 45% move to the downside. So from current price action, if we take a look at, sorry, if we take a look at what this what 45% looks like from the highs, more or less, from the current highs, although I do think it's gonna run some more. 45% gets us down to just shy of about $3,000 from current price action, more or less. So that's right now that would be below the 21 exponential moving average, but not quite low enough to touch the green exponential moving average. Green exponential moving average as of current price action, we need more of like more close to like a 50% dump, a little bit more than a 50% dump from current price action. I think that would be a fantastic buying opportunity if you were to see gold at $3,000. But I'm not saying that's going to happen right now, but it's something to keep an eye on. Later this year into next year probably would be my bet if I had to guess, and then the run would continue into the end of this decade where you get massive blow off top, I would say, from gold, and then we'll see what happens. Another thing to keep an eye on that might actually, let's see if I have this here. So I've talked about this chart a few times before, and this is the price of the S&P 500 measured in gold. And as you could see, it's really breaking down from this previous support level, which is the 1.43. Yesterday's run really, really, really had um, this 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 price of the S&P 500 break down significantly from its previous support level, which is 1.43. So now it's living almost 9% below that number, and at the low yesterday it was 12.6%. So that's really, really big downward move. And I mean, the S&P 500 has been in a bear market relative to gold since 2001, so that tells you something, right? Although it is at all-time highs, and it's, to me, I think it's starting to stall out a little bit. um at the highs, it's not really doing much. It's kind of been there for like 3 months, pretty much at the high, and it's not really making a decisive move to the upside. So I'm inclined that there will be some kind of a pullback in traditional markets at some point, later this year. I don't know when, but this is a bit of a headwind telling us the direction that the stock market wants to go in, right? And everyone is moving into everyone, but I guess smart money, and a lot of people are moving into, you know, a safe asset like gold, right? Historically, it's been very safe. So yeah, so this is a big headwind. And if you price it also in silver, it looks very similar. Um, it's really breaking down. Like, we haven't seen the S&P 500 this low versus silver since pretty much around here, and really like back here. Like this is a long time ago. It was in 2013, May of 2013. So we haven't seen these prices since then. So 12 years ago. So the S&P 500 is definitely in a bear market right now when you price it to precious metals, which is definitely the most interesting thing right now to be looking at in markets. Um, I mean, this is a downtrend. Well, we got to see where this one goes, right? When you have it priced to when you have the S&P 500 priced to silver, look, it's a bull trap. It's a bull trap where it matters at the spot 618. It's a bull trap. So we'll see if this gets a lower low, then we'll see what happens. We'll see what happens. But I mean, it still has a long way to go. But I mean, the way silver's been running, I wouldn't be surprised to see it come down. Especially if you see silver keep running and you see the S&P 500 start to dump off in dollar terms, and I could really see these numbers being retested. Excuse me, and it haven't the S&P 500 hasn't been down here since 2011, so I think it's very possible that it could retest these numbers. So we'll see what happens. So yeah, that's all I have for today. Again, like, subscribe, and leave a comment if you're inclined to, and I'll